Good morning, good evening, good afternoon, wherever the heck in the world you are. It's the one and only notorious, glorious V, the Guerrilla Economist, coming to you live. And it's Visual Trading Thursdays, and we have none other than the man who calls himself the Crypto Cowboy, because he is the man who ropes in all the trades like nobody else can. And we have Frank. We have Frank with us.
Hey.
And with that being said, guys, what's going on?
Hey, how's it going?
It is going very good, my friend. Very good. How are you?
I'm good. Just switching on the Do Not Disturb before I do a screen share. Give me a second. All right, good. Yeah, I don't need 19,000 texts to come through from my wife. Almost called her my fiance. Still not used to it yet.
Not anymore.
So, but yeah, so it's been kind of quiet. Market's been more or less consolidating. So Bitcoin's just kind of going at a tighter and tighter range and not really giving a whole lot of action. I mean, we did have a 17% win earlier this week on a particular coin, so we're still finding great opportunities in the market. But
Christmas has to contribute to that, right?
Yeah, I mean, I think everything kind of just slows down. This time of the year, if you are, let's just say you're doing equities and you're like a major equity firm, and let's just say that you met your goals, then why would you do anything to mess that up?
Right, Roger.
That's on the major side. And on the rest of it, I mean, yeah, somebody like me, even somebody as addicted as I am, I'm going to take a few days off and go see family, and I think it's just everything kind of slows down right now.
Right. Cool. Well, this show, Visual Trading Thursday, this is where we stop and look at an indicator or something important that helps us trade. And so today we're going to be talking about risk to reward ratio, which I know is something very near and dear to your heart, Cowboy. You talk about this all the time. So I'm very interested to see what you have to say. Sure. A lot of these videos we've done, you and I have done them something similar before for the crypto school. But I know the past video you did on risk reward was just you and Z. So I've never sat in on this one. So I'm really interested to see what you have to say about this.
Sure. Well, it's I'm excited to be able to share that. I mean, I think it's trading is. I heard a really good analogy. It's like baseball, where if you look at the Hall of Famers, their batting average is below 50%. It's something like in the thirds, like 33% or less. So you get up to the bat, and most of the time you strike out. Yeah. But those times that you win so big that it counteracts that. And that's how trading is. Some of your professional traders are well below 50%. But the thing is, what they do is they make sure that they calculate the risk to reward ratio to make up for that.
This is such an important point. We've got, this will sound like a commercial, but I really mean it. We've got our new 7 for 7 deal at watchestrade.io, where you can come into our room for $7 for 7 days, full access. And so there's going to be a lot of new, there are a lot of new traders coming in, or people who are interested in trading. And that's such an important thing to recognize. I know when I first started trading, I wanted to do everything all at once, all the time. Oh, this is the one. You put your whole book up. And that's just not how it works. Not if you want to win long term.
Yeah, you can do it however you want, but that's not how I do things. So that's not how my trading plan goes, and my trading plan is just based on successful people's trading plans. So, so we're looking at Polymath, and just I had somebody. First of all, Polymath is a great coin. We talk all day about it.
That's where you marry more than one woman at a time.
That's where you marry more than one math book at a time.
Oh, okay. That's a British term.
I was so stupid. So basically, Polymath is a great coin, and it's basically, I think, setting itself up to work with like securities tokens and stuff like that. And it's been doing that since like 2013, and it's still around. It's a great coin. So I know Kung Fu and I talk about it quite a bit. So this is a daily chart. Now I had somebody tell me, hey, this looks like it's flagging, and it's ready to go up. That was actually Yomami requested a chart for that, or an opinion just before the show. And so that's why we're actually choosing to talk about risk reward ratio, because it's actually a pretty viable trade. Now, my rule, and everybody has different rules, but my rule is that I need at least a 1-to-1 risk reward ratio. And that simply means that if I enter a trade, the amount that I could win will be the same or better than the amount that I could lose. And what does that look like on the chart? So I'm going to zoom down to the 4 hour, and that was the daily we just looked at. So for people who might be a little new to trading, each one of the bars right now on this chart, each one of these bars that you see represents 4 hours worth of price movement. So maybe did see that we're actually in a bullish movement right now. Price action, we're headed up. And there are a few things to look at. I will want to bring out the RSI here really quick. Let's see here. Whoa, it brought out everything. Okay. Well, let's get rid of some of those things. Not going to need this. Not really going to need that, nor this, nor that. Okay, so now I'm going to zoom in a little bit further so we can actually see the flag. You can kind of see the flag right here. So the bull flag is essentially it's a bullish formation. Just leave it at that. Now, if I go down to the 1 hour, we can take a look at this bull flag, and we can see, okay, here it is. It's looking strong. I wouldn't say it's high and tight, but it's definitely consistently going to the right. It's not the strongest flag I've ever seen. I might not even trade based on that at all. But what I will do is I will help people see what they want to see. And most of the time, I will chart things. Sometimes people ask me to chart something, and I'm just like, no, it's not something that I would consider entering for any reason. So I don't really see a reason to chart it. Most of the time, though, I'll chart things. And so this is one of those where I wouldn't enter it, but here you go. So we've had a bullish move, and we're looking at a double top, which is actually a bit of exhaustion, right? So there are a couple of reasons why not to get into this trade. However, let's pretend that those reasons don't exist, and let's just pretend that this trade looks good. Like I want to get in, like I know it's probably going to go up, right? Mm-hmm. So here's the issue with that. Now, you have a support right here, and if I was going to do a stop loss, I would go below that support. I might even do a stop loss. Let's just say down here to be safe, right? Calculating stop losses, there are a lot of ways to do it. We're going to keep this conversation kind of simple and just say that this bottom one is what my stop loss would be for this trade, okay? So now what we can do here is we can do what's called the risk-reward ratio calculation. Now, in order for me to enter this trade, in fact, I'm going to raise this up a little bit just to kind of make this, more of a less conservative trade. So I wouldn't enter this trade until it broke above this support, right? So I'm going to go ahead and zoom in. The whole idea with the flag and what it would look like if it broke out and it, did what people hope is that it would move inside of this corridor, which is right here. And it would just kind of bounce back and forth in here until it finally gathered up enough steam to break this resistance, which is above it. Okay. So if it did break that, then flags tend to go as high as the flagpole or not quite as high. So if we broke, say, from like right here, the best we're going to get is right here at 4,200. So you have that that's a minimal level that you might profit. If I was going to be like aggressive, then I would say this right here. That might be an aggressive target. So that being the case, now I can do some math, right? In the best scenario, we were not going to get above this support, the best scenario. So I'm going to do a best scenario just like this. We'll say that I enter here because I would wait for it to, just so you understand this, and this is important, I would wait for a breakout and probably a retracement because I'm a conservative person in this market. In this bearish market, I go conservative. So I look for a breakout and a retracement. I would enter just above this blue line. So let's just say I enter at the blue line to for ease of explanation. I have to the top here is the best I'm going to get. To the bottom here is my stop loss. So the best I'm going to get is right all the way up here to say 45.25. If I get stopped out, and this is like a nice stop. I mean, normally my stop would be a bit lower, but even with this nice high stop, I'm just saying nice, but let's just say this high stop, 35.59. What does that mean? Well, the amount that I'm going to go up is, as you can see right here in the center, that 0.91. I have an inverse risk reward ratio. That means this red box is about 10% bigger than this green box. That means that I could lose 10% more than I make. Now, that's like being extremely aggressive. If I were to be conservative, we're looking at like a 0.26, which is like a 20. It's way inverse. It's a 1 to 4. I lose 4 times as much as I win. And if we take stop loss that I might consider, we're down to a 0.2, so it's a 1 to 5 ratio, and that's completely inverse. Normally, if I take a trade, what I want to see is a very small red box and a very big green box, meaning that there's a lot of room to go into profit, and then a reasonable stop loss is not that far below. So that's risk reward ratio. This trade is not a bad trade overall. It could definitely go up. It could even go up pretty high, but just the fact that I have so much to lose in the stop loss, that I would do, is it makes it not an attractive trade for me.
So put simply, you want the red box to be about the same size or smaller than the green box.
Exactly.
Okay.
And as small as it can get.
And that's based on where you think it's going to, just to try to summarize, based on where you think it will likely go if it pops, and where you think is a good, solid stop loss spot.
That's correct.
That's very helpful. Very cool. Could you maybe quickly give us another example? I don't know if that's too hard, if there's another trade, but just to sort of see it all get built again, like in rapid succession.
Oh, no problem. Let me see.
This is very helpful, by the way.
Sure. I'm just trying to think of where we would see a trade. I mean, I could look at like a Forex example because I just kind of have that ready to go.
Yeah, great. And then you're not even giving anything away.
Yeah,
because we don't do Forex. So I do have a question from the chat, but I'll ask you quick, and then we'll close up for today.
Sure. So what I would do is I'm looking for this USD JPY pair. You see these kind of trades in crypto as well. It's just that I had this one ready to go, and we're not going to spend. Actually, you know what? Let me take a look at. No, I'll be giving something away. All right. So now Forex, I think it's going to go down and bounce off this 618. I was looking for a retracement to this 618 ratio. Where the top of that blue box is where I think most likely we're going to see the bounce, and that's due to some structure back here. Now, if that's the case and we bounce, then my conservative target is going to be like the 236 Fibonacci level right there.
Yeah, that red line.
The red line right there. So that's going to be a conservative target. And there's a lot of reasons for that, why I would take that right now, but we're not going to really go into that. Let me make this a little more readable for everybody. Give me 1 second. Just need to tone down some colors. So this blue box is it's my kill zone. We're not having that talk today, but this will be a long trade. So if I were to enter at the 618 and my target is at the 236, my stop loss would be down here, just based on how I do stops with these kinds of trades, at the 113. So that means I'm not interested in this trade unless it actually goes down deeper. Now, if in fact this goes down to the 786, which is down here, this bluish line instead of this kind of green line, there's a decent case to be made that could happen. So if I were to actually adjust this, give me 1 second, to where my entry was right there, and I take that same target up here just below. I like to front run. I like to close a little just below, now we're looking at a 1.73 risk reward ratio. So you have a big green box, small red box. So, you know, it's as simple as that. And then the obviously price will have gone down to here. And we'll go up from there to my target. Now, of course, it might not reach that target. It may not go that far. Nothing always goes as planned. But this is how we do trading. We just look at probabilities and go from there.
Nice. Very cool. All right, couple questions. I'm now thinking this question was a joke because Joe is from Joe Marshall. He's made some pretty funny comments just now.
Okay.
But it is a good topic though, because I actually saw this on one of the financial Facebook groups I belong to. He said, "Do you recommend maxing out credit cards to buy cryptos?" Asking for a friend. But here's the thing. Here's the thing. I've seen guys say, you know, do it, and we've certainly had, you know, people come across our path who have gone for funding to invest in cryptos, and you know, it sounds crazy. It sounds crazy, but and any thoughts from either of you on that? V?
Yeah, I have a recommendation. My recommendation is nothing because we don't give recommendations.
That was the first thing I said. I said we don't recommend anything.
Yeah.
But how about thoughts? Any thoughts on it?
Like what would I do? Is what maybe
what would I do? You really want to know what the gorilla would do? The man who lives by the rule of there are no rules, break every rule, just don't break the law. That guy. You want to ask that guy?
I don't know if I want to ask that guy. Yeah, I don't know.
Here's what I would do.
Couple different ways to look at this. Actually, you would think we would be really
here's what I would do.
Cautious and say no, never.
Okay,
but
screw. I like this. In this regard, this is what I do. It's 100% legal. This is what I would do. This is not advice. This is not recommendations. It's not anything. This is what I would do because it's me. And I got, you know, I'm not afraid. I'm not afraid to take a chance.
What is that, Eminem or something?
Yeah, right? Here's what I would do. Whatever line of credit I got, whatever loans I got, yeah, hell yeah. I take it all out. I'll dump it into whatever investments that I can manage, okay, that I'm responsible for. And I manage it. And it wouldn't be the first time that I've taken stuff out, invested it in something, and then burned whatever line or whatnot I had, and then had it wiped off my credit report. It's just that simple. I don't care. You know, the loan's fake to begin with. Mm-hmm. I mean, the credit card companies ain't banks, folks. They don't, you know, the only banks are allowed to create money out of thin air, right? That's called fractional reserve lending. Credit card companies are not that. So how are they giving you, how does Amex, how does Discover Card, how does Visa or Capital One give you like a $20,000 line of credit? What do? Well, they take your social security number, which has a monetary value, and they borrow against it, and they loan it back to you in the hopes that you would pay it back, right? It's your money to begin with. Then they hit you with penalties and late payment fees and whatnot if you don't pay it on time. And then if you don't pay it on time, you default. Well, guess what? They got default insurance. Okay, it's called. They have a credit default swap insurance against you. So if you do default, they get paid anyway. When they sell that line of credit, you know, that you took out for $20,000, they sell it to a collections agency for pennies on the dollar, and whatever they collect, they share in the portion with the original creditor. That's the way the game works. I mean, this whole freaking economy is based on debt. I mean, think about it, folks. How come you don't see credit card companies going out of business every other day? I mean, come on. It's a game. It's none of this crap is real. The problem is you have people that literally believe that this stuff is all real, that everything's, oh my God, this is real. This is really happening. No, it's fake. That's all it is. Credit's not real. None of this stuff is real. There's ways you can fix it. The guys over at Remain Calm, there's a new system that they're coming out with. And, you know, there's a new credit company that they're going to be partnering up with that literally does it in 15 days. You know, so it's a game. None of this stuff is real, man. You know, until the day where they get rid of the current credit system, I won't worry about it. I mean, you got people who are like, oh my God, my credit score is ruined. Oh my God. Oh, I'm gonna go to bankruptcy. Who cares? See people have bankruptcies wiped off their credit report all the time. It's not a big freaking deal. But that's just me. That's just me.
Plus, never go into bankruptcy. It's not necessary. we can talk about that.
Exactly. There's no need for it. You'll waste so much time and money.
But you do. There's a lot involved. You have to know what you're doing with all this. Make sure that you're in a position where you could do it. I mean, there is. It's. I mean, everything you're saying is true, but there's other moving parts. So you want to make sure you know what you're doing before you do something crazy like that.
Yeah. Yeah. You got to also make sure that your assets are protected, right? So they can't
that's
levy.
You want to.
You can't levy your bank.
If you're
how do we protect that? Well, we have a structured bank account where they can't levy it. We set it up for you. This is why wealthy people don't get in trouble. It's because they're structured right. They're set up properly. That's what it is, man.
They know the game. They know the inside baseball.
Yeah, that's all it comes down. And you said about it's a game, man. None of this crap is real. So if it was me, okay. Give me a $10 million line of credit. See what I do with it. You'll get the first 3 months worth of payment. That maybe 6 months after that, I'm out.
Yeah, you'd be on the yacht with your new friends.
Exactly. I would take that 1 million and made it into like 10 million and be chilling. And they'll be spending the rest of like the next 7 years writing letters and making phone calls to me, hoping that I pay it back. Yeah. That's so evil. I love it. Just kidding. So the reality is, come on, folks. You know what it is? I love it when people try to approach banking and finance from such a moral standpoint, and they don't realize this thing is corrupt. This thing is satanic from the foundation to the topmost stone. And that you don't understand, V. This loan that I took out, this line of credit, I ran $50,000 in credit card debt. I have to pay it back. It is immoral if I don't. I'm like, jackass. The whole system is rigged against you. They're raping you across the coals, and you're wondering if you could be nice and pay it back. I don't get it, man. It is what it is. Anyway, all right, guys, we got to run. We got a meeting coming up. Thank you all for listening in. We're over and out.